Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. I have two awesome guests with me today. Obviously, most of my listeners and viewers, you're very familiar with my co-host, Mr. Tony Shore. And then I also have a very special guest with me. Again, we're very fortunate to have the relationship that we've built over the last 20-some years with Gradient Investments and the team over there at Gradient. And so today we have with me in the studio, Mr. Tyler Ellegard, who's a portfolio manager at Gradient Investments. So
yeah.
And the crowd goes wild.
Woo, the crowd goes wild.
Now, Tony, was the crowd going wild? Was the crowd going wild because they saw Tyler on the show, or was the crowd going wild because they were witnessing a table tennis game you were telling me about at Gradient Investments in the headquarters? I heard Tyler's a ping pong shark, and he has galleries around him that watch those games.
Yeah.
So I'm thinking that might have been the crowd from one of those games.
Yeah, there's at least one person that just watches while he plays because he's so good, and sometimes it's many people. But Tyler is kind of a ping pong. I've watched him. He puts a little English on that ball or spin.
Oh yeah,
I've watched him. He's got the moves.
So Tyler, you got a little experience there. You kind of know what you're doing.
A little bit. I don't want to brag too much,
Now, what does that come from? Just randomly playing? I mean, were you in any kind of leagues at all, or did you get any training, or how'd you get so good at it?
Well, are we talking about table tennis, or are we talking about picking stocks?
Well, let's stay on the table tennis for now. Let's stay on the ping pong, and maybe we'll parlay that right into your reputation in managing portfolios and picking stocks, because it's been awesome as well. But yeah, let's talk about the table tennis, the ping pong. How'd you get so darn good at that?
Well, I mean, growing up, we always used to play as kids, and then every hockey tournament, every hockey camp there's always ping pong going on.
Yep.
So we'd play, but then I really didn't play for a long time, and then one of my colleagues challenged me to a game, and I kind of let her win a little bit.
Oh,
right. And so then I made that comment that I let her win, and then ever since and then more people join in. So now it's just everybody wants to try to beat me. So I've gotten better just
because you have to.
Yeah.
Because you got a reputation to uphold.
I don't like to lose either. So that's the other part of it. So
right.
Make sure I stay on top there.
Now, Tyler, I bet that competitiveness, I know you're a very competitive person, and in a good way. And so I bet some of that competitiveness is what helps you be such a great portfolio manager. You kind of challenge yourself. You really work hard at it. You don't want to be outdone by, I'm just going to, not to name names, a Keith Gangle or a Jeremy Bryan. You really want to stay at the top of your game, and you really have. You've done a great job as the portfolio manager over there at Gradient Investments. I mean, you guys have, it's over, what is it, 6 or 7 billion under management now?
We are just shy of 7 billion.
Wow.
That's amazing.
Wow. Yeah.
That's amazing. And you guys have done phenomenal. I mean, I know for all of my listeners and viewers that have been clients of ours for a long time, the name Gradient Investments is no new name to you, as we've had a relationship with Gradient for over 20 years, and they manage all of our family's, what we call our assets under management, our riskier money in the market. The team over there, Tyler and his team at Gradient Investments, have been managing those dollars for us. And I remember when we started, obviously it was a couple $100,000, Gradient managed in their very first portfolio. And wow, has the portfolios grown over time? The team has grown over time. The results have been amazing over time. And so it's awesome, again, Tyler, the relationship we have with you, the services you provide for all of my clients, and then to be on the show and kind of talk to us from the trenches, so to speak, right? Because it's not very often, if, listeners and viewers out there, if you think about all the money you have in your 401k, in your IRA, in your Roth, and chances are you own mutual funds. Very good chance a lot or most of your money is in mutual funds. And if you follow your mutual fund, they mail you prospectuses once a year. And of course, we all read those, right? Cover to cover, we read them, we understand them. And that's a joke because I don't know if there's anyone that's ever read one prospectus cover to cover and enjoyed it and understood it. But in there, it also tells you who the money manager, who's managing that fund. Like if it's an American Funds, a Fidelity Fund, a Franklin Fund, it will disclose to you the name of the managers and how long they've been managing that fund. And there might be one manager, there might be multiple. So you do get to kind of know there's a person or people behind the scenes, but how often if you own a mutual fund, how often have you ever been able to hear from that mutual fund manager? How often have you ever been able to maybe meet them face to face? How often might you be able to have a phone call or an email back and forth with a money manager of a mutual fund telling you why they're doing what they're doing, why your portfolio is not doing what you thought it was going to do, and right from the trenches. And that's very rare. And I would say in my 22 years, Tyler, you could probably test this, but in my 22 years, I've never met one investor that's ever had an opportunity to meet face-to-face, talk to on the phone, email back and forth, or hear live like this from the people actually pulling the strings in the trenches, managing those mutual funds. So that's pretty powerful. That is pretty cool. That's one of the reasons we obviously love the relationship with Gradient Investments, because here we are, Tyler. Not only do I have you on the radio show, which my viewers on YouTube right now, you can see Tyler. My listeners on the radio, you can hear him. But Tyler has also flown over here from Minneapolis over here and spoke live at one of my client events where we had over 150 people in the room. He walks around the room, shakes hands with those people. And I tell people when you come to those events, when you see Tyler or another member of his team, if you have questions or concerns, if you have, maybe problems, you're upset, don't be shy to grab their hand a little tighter, grab them by the shoulder and have them answer to you. But also help, when things are going really well, give them a high five and let them know they're doing great. So again, to have you on the show, Tyler, I greatly appreciate the relationship with us and your entire team over at Gradient Investments. What we want to really do today in the show is it's early in the year. Here we are, just the beginning of February, which I can't believe that it seems like it was July and now here we're in February already. But towards the end of the last year, I think it was the last time I had you on the show, and we were talking about the election, and we were talking about, well, if the Harris administration this, and if the Trump administration this, and here we are, we're already a couple months past the election. The previous administration is out. The new administration is in. There's been a lot going on. There's now I'll tell you the one thing, and I'm sure both you guys shaking your heads are going to agree with me. All of our listeners, all of our viewers, are we not all at least happy that damn election is over? I mean, yeah. It's done, right? It's over. It's done. Thank goodness. Thank goodness. It was just that was not a fun year to go through that from a political standpoint. But here we are. Excuse me. Here we are. We're into 2025. We're just over a month. Excuse me. Just over a month into the new administration. So, Tyler, what I really want to talk about today in the show, I really want to give you the reins, and for the next 2-3 segments here, I want you to tell us, all my listeners and all my viewers, what are some of the potential tailwinds that are pushing this market and this economy in a good direction? What are some of the potential headwinds that we are just inevitably going to come up against that might not be so positive? I want to touch on definitely some real hot topics right now. AI, artificial intelligence, definitely being one of them. Tariffs is definitely at the top of everybody's thought pattern right now. So, Tyler, let's kind of jump right in and talk a little bit more about what are you guys seeing right now? Headwinds, tailwinds, pros and cons, goods and bads coming into 2025.
Absolutely. Well, I appreciate the intro. You made me blush a little bit there with all the nice things you had to say about us. So I appreciate that.
Well, they're all 100% true, Tyler. You and your whole team there.
Yeah. So, any year there's going to be headwinds, tailwinds, right? It's a lot of times there's a lot of noise around stuff, and the market sees it. It knows it, right? The market is made up of millions of investors, right? That come to a consensus on what the market should be priced, right? So there's always the noise, and it's trying to figure out which ones out of that noise are going to be the most meaningful, whether it's a tailwind or whether it's a headwind for the market. Sure. So we'll start with some tailwinds. The economy in general is as much as we hear about consumers feeling stretched, and I know that there's consumers out there that do feel that.
Absolutely.
But from the economy as a whole, right? We can't just single out one specific group. We have to kind of group everybody together, right? And that gives us our general view on the economy. But from a general perspective, the economy is still moving along at a pretty good pace, right? I mean, we just got unemployment numbers. Unemployment actually went down to 4%. It was up at 4.2 was the high point, recent high point. So unemployment rate has come down to 4%. And, that might seem high versus, maybe 6 or 7 months ago when we were talking about 3.5% unemployment. But if you consider what the average unemployment rate is, it's around 5%, right? So the fact that we're sitting at 4% means that if you typically, generally speaking, if you want a job, you can have it, right? There's more jobs available than the number of unemployed people out there right now. So unemployment rate is, with it being this low, it suggests that consumers can still spend because consumers have jobs, right? Now
Mhm.
whether that's one job or two jobs, right? That's up for discussion
Sure.
with what prices have done in the last, call it 3 or 4 years. But nonetheless, unemployment rate is very, very low. The other part of that in the report was that it tells us what the wage growth is, average hourly earnings. And that was actually up 4.1% on a
Oh,
year
good.
basis, right? And so I would say the norm is closer to the inflation rate, right? So if we've got inflation, call it 3.5-ish, well, call it 2.7 right now is
Sure.
is is the one of the inflation rates. So if we use 2.7, your wages are growing 4.1%. That's significantly higher, a faster pace than what prices are doing, right? So we're starting to catch up with the 9% inflation that we saw in 2022. So between very low unemployment and high wage growth, it means that consumers are going to continue to spend, right? We're Americans. We love spending our money. As
Absolutely.
soon as it comes in, we want to send it out, right? It burns a hole in our pocket when it sits there. So as long as unemployment remains low and wage growth continues to grow at a pretty sizable pace, I would call it, the economy should be just fine because 70% of our economy is consumer spending. So
Yeah, and let me I'll flip that. So when we say unemployment is low, the flip side of that coin means employment is high. Like
yep,
over 96% of employable people out there, if you want to, they're working, they're employed. So 96% of the population is employable, has a job, which is great. That is high. That is very positive. And wages are higher. So wages went up over 4%. Inflation's up less than 3. So people, not only are more people working, they're making more money. And not only making more money, they're making more money than the cost of goods is going up. I see all three of those things as a very, very positive when you look at the two sides of the stock market. I always keep it really simple. And Tyler, you and your team probably taught me this. Keep it simple, right? There's two sides of the stock market. There's the consumer and there's the businesses. And right now we talk about the consumer side, more people working, more money, less inflation. So to me, there's a lot of positive things going on with the consumer side of the stock market.
yep, absolutely. So the market looks at those data points and says, as of right now, everything is all good. And so that's good news for the stock market, right? So the other side of that is headwinds. What are some of the noises right now for the economy
Mm-hmm.
specifically? And I think the number one, and talking about the new administration, and this is regardless of who you voted for, right? This is apolitical. This is just what's out there.
Absolutely. Yep.
There's a lot of changes happening within the government, right? They're trying to pass through different executive orders. Judges keep holding it up, right? So whether you want them to go through or not, there's a lot of uncertainty. And then the biggest elephant in the room is tariffs,
Mm-hmm.
right? That's tariffs can be an executive order, which means Trump can continue to threaten or place tariffs on whatever country he deems fit, right? That's part of the executive branch. So he can continue to do this whether you want tariffs or not. And we saw, what was that, 2 weeks ago, he signed the executive order, and then last week on Monday in the morning, the market dropped, and about, call it an hour later, the Mexican president, she announced that the tariffs were going to be delayed 30 days.
Yep. Mm-hmm.
And then Canadian ones were still going to go through on Tuesday, but then late in the, I wouldn't call it, I guess, late afternoon, Justin Trudeau of Canada announced that the Canadian ones were going to be delayed 30 days as well, right? So there's just so much uncertainty because if you think about it from a business standpoint, it's hard to plan. We saw how how challenging supply chains can be when there's disruptions, right? We had COVID, supply chains got all messed up. They're pretty fragile, right? And we've been able to bolster them a lot better since COVID. There's been a lot of manufacturing outside of the US has been spread around. It's not just China. We used to import I think it was 22 or 23% of our imports came from China. Now we're down to, I think it's 14% of our imports. Right. So we've certainly diversified our supply chains away from being solely focused on China, which is
and that's
great.
a good thing. I think it's a great thing.
That's huge.
But when you start to talk about tariffs with some of our other big trade partners, whether that's Canada, Mexico, if you combine the three, China, Canada, Mexico, if you combine those three, that's 42% of our exports roughly, or imports, sorry. Right. So that could be a pretty significant impact. And if there's if you're talking about 25%, that's a 25% increase in prices that we have to pay. Right. Now
on almost half of everything we're bringing in.
Correct.
Exactly. Right. Yeah. And so there's just a lot of uncertainty on what he's going to do. Is he using these tariffs as a negotiating tool? Is he actually planning to put these in place? And now we have to wait another, 23 days now, I think, or 24 days until we find out if we're kicking the can down the road another 30 days or if they are going to go in place. So from a business standpoint, it's hard for these companies to plan around that, right? One day you order some supplies, next day you order supplies, but all of a sudden it's 25% more expensive, right? So it's when you're trying to plan on how much is this product going to cost once all my inputs are in, companies don't want to eat the full 25%, right?
Sure.
They probably want to pass that on to consumers as much as they can.
Yep.
And it doesn't mean that everything's going up 25%. It's, how much of the imports go into that product. If it's 10%, then 10% of the product goes up by 25%. So then you have a minimal impact, but nonetheless, it's an impact on consumers.
Sure.
Oh, sure.
So there's just so much uncertainty surrounding the administration, all the different things that they're doing with the government, and if these tariffs are going to go through.
Yeah.
The one caveat I will say with that is we've had tariffs. You hear a lot of bad news about tariffs, and generally speaking, if you start to tariff too many countries and too many goods, that's not going to be great.
Right.
But we have seen China have tariffs since Trump's first presidency.
Sure.
And Biden didn't repeal them. We've actually added more to China during Biden's presidency, and we added some here last week as well. So, and we didn't see a whole lot of impact with that. We saw our trade decline with China, which is, I think there's could be two goals with what Trump and his administration are trying to do with tariffs. One could be the negotiating tool, right? We saw Mexico bring 10,000 troops to the border to fight the fentanyl stuff. Canada, there was some more support on the border there as well. So it could be a negotiating tool. The other one is we have a pretty significant trade deficit with countries. If you look at a lot of countries, their imports is about 14%, exports is about 14% of GDP, right? So it's pretty even and in line.
Okay.
Ours is much wider. It's like 40% in imports and about 12% in exports, something like that, right?
Yeah, and it's really bad with China.
Yeah, exactly.
Yeah.
So who knows what he's trying to do? There's just somewhat uncertainty around tariffs right now, and I think that's the biggest headwind for the market at this point.
Yeah, we need to take a quick break, but when we come back, I'm going to pull up a chart. You can talk to us a little bit about that. Maybe we'll talk a little more about tariffs because this is interesting. Tyler, great stuff. Jason, should we give away a few copies of your book?
That's a great idea. Go ahead, Tony. I think it's a great idea. Thank you.
Take this break. Yeah. Jason wrote a book, Empower Your Retirement. It's a great book, and we're going to give away copies to the next 10 people who call in and request it, and we'll mail it out to you. No problem. Just call 989-835-7203. That's 989-835-7203. Also, for great information and to contact Jason's office, you can request a book this way. Go to GreatLakesInvestmentAdvisors.com. That's GreatLakesInvestmentAdvisors.com. All right, we're back with your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our host, the man with the plan, is Jason Cryderman. Jason, great show so far today. Now, obviously, any guest we would have on this week is going to be a letdown after Carson. Your son was on last week. I mean, that's probably the biggest get we've ever gotten on the show. That's the second or third time he's been on.
Well, I know in his mind it definitely is. I mean, any of our viewers and listeners, if you caught that show from last week, my son was on, or any of the times he's been on 3 or 4 times over the years, probably in the last 2-3 years. But Tony and I were actually chatting a little bit before today's recording, and Tony says, "Hey, next time he's on the show, Jason, he's got to be nicer to us. Like Carson has got to be nicer to his dad and his dad's co-host, because it's really our show, Tony. I mean, this is our show. But when Carson's on, he kind of takes over. Like, it's his show.
Yeah,
and he loves to razz you and I, and he loves to twist it a little bit. And but yeah, he was a heck of a guest. When I can get him out of school and get him on the show, it's an awesome opportunity. But if I can't get Carson here, there's probably only one other person that we have on the show today that I would rather have on the show today. And that is an awesome portfolio manager for Gradient Investments, Tyler Ellegard. So Tyler, thanks again for the relationship. Thanks for everything you do, managing money for all of our clients. Thanks for being a guest on the show again. We started out that first segment talking about some tailwinds, some headwinds of the current economy. And, we have one administration leave. We had another administration coming in. Big word right now out there is the T word, the tariffs. What is he doing? Is he pumping up his chest? Is he using negotiations? Is he going to slam everything down and close the door? I think there's a lot going on out there. I really do. And that's why I love being able to hear from you guys and tell us more. What do you think in the trenches and all the people that you talk to? What's going on? So let's pick up in this segment right from where you left off. Tony, I know you said you had a visual. You had a cool chart.
I do.
For all of our viewers on YouTube, you're going to be able to see this awesome visual. If you're a listener on the radio and you're not a viewer on YouTube yet, please go out to YouTube, type in Your Financial Empower Hour, click on us, become a subscriber, follow us on YouTube. You'll get to see all these awesome pictures and charts as well. So this one that he just popped up for all of our listeners that aren't viewing right now, it's called The Impact of Tariffs. And this is a chart from Gradient Investments. That Tyler, take us through a little more. What do we see on this chart? What are the goods and bads? What does it mean? And where do we go from here?
Yeah, I'm terrified.
Terrified.
Did you get it?
I see what you did there. We hear what you did there.
So we'll start with the one on the left here. So this is just our trading partners, our top 10, right? And it's pretty significant, the drop off from our third largest trade partner in Canada to our fourth largest in Germany, right?
Wow,
so
that's a big difference.
So this is why there's so much concern around tariffs and just slapping a 25% tariff across the board, because it'll cover a lot of products and a lot of trade, right? Again, 42%, Mexico being our largest trade partner. It used to be China, but then the initial tariffs back in 2017 with Trump started to whittle that down. And then also the supply chain issues with COVID took a hit on China that way as well. So it's pretty sizable when you consider how much, and I always try to refrain from using how much we trade, because when you start talking billions of dollars, it starts to, at least in my mind, it starts to throw it for a loop, right? It's a lot of zeros.
Yeah. So, and you get into the trillions and then it's crazy. Yeah.
When you start talking $467 billion, it's hard to quantify that. But when you think about 42%, right, that's a lot of trade that could be impacted. So moving over to the right side, this is where I find it most interesting, and I've been talking quite a bit on this topic, but there's one area that stands out with trade, and that's the crude petroleum, right? And our biggest trade partner there is Canada. And I think this is where the tariffs on Canada could have a significant impact. So have you guys, I got to throw this out here. Have you guys seen Landman, the show on Paramount?
Yes, I love it. I'm all caught up, by the way. I wait for
So
the next
good.
episode to drop.
Yep.
So opening scene, right? He starts talking. He's negotiating a land lease, and then you start to hear in the background his voice talking about oil being the 7th largest industry in the world, and all 6 that are larger than it rely on oil, right? So oil plays a pretty significant role in our economy. And Trump and the new administration, they want to drill, baby, drill, and we can produce our own oil within the US, right? That's his goal. There's an issue with that. There's 2 types of crude oil, or there's more types than 2, but generally speaking, there's what's called light sweet crude oil and heavy sour. The US produces light sweet crude oil, which is WTI, West Texas Intermediate, and that's when we talk about oil price, that's what we use. The problem is a significant portion of our refining capacity here in the US, it's about 70% of our refineries have to have heavy sour crude. So in 23, we haven't gotten the final numbers for 24. So in 23, we were able to produce about 13 million barrels of oil per day. We exported 10 million barrels per day. Okay, so we exported most of the oil that we produced, and we imported about 6.5 million barrels a day. And most of that, about 90% of those imports are heavy sour. So not the stuff that's produced here in the US. Right. So in order for us to be reliant on US oil, a lot of things would have to happen. The refineries would have to invest a significant amount of money to change over how they can refine the product. So what does that mean? Again, going back to my initial thought on Landman, everything is reliant on oil, right? There's petroleum jelly, right? Everybody uses it, right? It's a good thing to put on hands. You have cuts, right? Petroleum jelly, right? Lipstick. There's petroleum in lipstick, right? Anything plastic, there's oil in, right? There's oil on different stints, right? Medical products. It's everything. It's everywhere, right? So if you start talking 25% tariff on crude oil, this is where I think a major headwind could come in for the market. Is if we do have a 25% on crude oil with Canada, it's going to affect everything. Now, it's not going to raise everything's price 25%. Right. But if crude oil goes into everything, and most of our crude oil that we need is imported, it's really going to affect the consumer a lot more than just the initial, well, my gas price might go up 25%. That in and of itself is not enjoyable, right? Nobody wants to pay another 25% on their at the pump. But then you start talking about other products, and other products have to increase price because the tariff on oil. So that's the part that stands out the most to me. Yes, cars, but when you put it in perspective of how much crude we import from Canada versus anything else, or even Mexico, that could have the most meaningful impact, in my opinion.
Yeah, I'm surprised when I saw this chart. I was really surprised that the majority of our crude petroleum comes from Canada. And I think a lot of people, that would surprise them. And maybe they don't realize it. And like you said, petroleum is used in so many products, from plastic to, I mean, everything. And it affects the entire energy sector. Even oil prices going up affect energy across the board a lot, right? I mean, so it could have an impact on so many areas. You look around you, how many things in your eyesight are made out of plastic? Probably almost every single thing you're looking at. I mean, me as a record, you see behind me, I've got records and CDs, petroleum-based products.
Here's the other thing that
it's crazy.
Is let's say we do decide to switch everything over and be fully based on U.S. oil. Well, where does 7 million barrels a day of demand, or 10 million? Sorry, excuse me. Where does that 10 million barrels per day of oil demand go? If we start consuming our own oil, there's a limited amount that we can pump every single day, right? The 10 million barrels per day don't just disappear, right? So what does that do to oil prices? If all of a sudden we need another 6.5 million barrels per day on top of the 13 that we're already producing, there's only one direction that oil prices go, and that's up.
You got to pay for that. You got to pay for the additional. Yeah.
So is it worth the 25% tariff cost, or is it worth trying to have all of our demand be reliant on US and price of WTI doesn't go up as much as 25%? I don't know, but that's the other side of it that you have to consider too.
It is. Well, hey guys, we need to take another quick break. Sorry. Let's take a quick break here. And for those listeners out there who have questions or they might have questions for Tyler or Jason about their portfolio or their finances, or they want a retirement income plan in place. All they have to do is set a no charge, no obligation consultation with Great Lakes Investment Advisors by calling 989-835-7203. And if you call and set up that appointment, you're also going to get a copy of Jason's book, Own Your Retirement. Just call 989-835-7203. All right, and you're listening to Your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with Jason Cryderman and Tyler Ellegard. Tyler is a portfolio manager for Gradient Investments, a fast-growing investment firm, been around for a while now, still growing. And Tyler, you've done a great job there with your portfolios, and you've talked about a lot of different aspects, what's happening here in 2025. We've been really drilling down on tariffs. I didn't know if you wanted to continue with that, or if you want to maybe switch around and talk about something else now. Jason, what do you think?
I think we should shift gears. I think it's been great. I don't really want to beat it to death, right? I mean, I like keeping a variety out there and diversifying for all my listeners and all my viewers. And just like we do in your portfolio, right? Don't spend too much time in one area. Diversify that portfolio, diversify your money. I want to diversify the time and the knowledge and the experience that Tyler's giving us today on the show. So Tyler, let's get away from tariffs for a minute. Let's go into another real super hot topic right now, AI. That's something else that, boy, for the last 3, 6 to 12 months, you can't look anywhere, turn anything on, talk to anybody without hearing or feeling the impact of AI and artificial intelligence and what all that means. So tell us from a portfolio manager standpoint, tell us a little bit more about what is AI, how does it work, and then some of the pros and cons to it in our current market and current economy right now.
Yeah, perfect. So this will be a good comparison. So what I'll finish off with tariffs, because I just want to throw this out there, and I know tariffs are certainly a concern for many people, and they're a concern for us. But until there's something that's concrete, right? Until we're not kicking this can down the road every 30 days, and until these are officially in place and we know that they're going to take effect, there's nothing that we can do. And it's noise right now, right? And I don't want to say don't worry about it, because we have to worry about it.
Sure.
But there's just, within the investment management side, we're not going to make a bet one way or another that tariffs are or aren't going through, because it can have a meaningful impact. So, we're going to continue following the situation, and we'll continue. It'll continue to be a concern for us, but there's nothing concrete that we can do within our strategies to make a bet one way or another.
Yeah,
right?
That makes sense. Yeah, that makes sense.
But if you contrast that with what's been going on in the artificial intelligence world with this thing called DeepSeek, that's concrete, and we've made actions around it to reduce some of our allocation towards the semiconductor chip equipment makers, right? So that's something concrete that we can make a position on, because we know it's there. We know the potential impacts it can have, because it's concrete, right? So if we take a step back and talk about DeepSeek, it kind of rocked the markets a couple of weeks ago with the research paper that came out about it. So, you guys are familiar with like Chat GPT, Claude, which is a company is a product from Anthropic. But it's basically a chat system that's built on significant amount of data, right? And there will be more use cases becoming available with AI and large language models and all of that. But this thing called DeepSeek, it came out of China. It started out from a hedge fund basically that wanted to invest in this, and they created a separate company that they invested in, hired people to build their own basically chat system using large language models. And it came out a couple weeks ago that it was just as good, if not better, than ChatGPT, Claude, Llama 3, all the major ones that are out there. But the big kicker here was that they spent about $5 million with an M rather than billions of dollars, right? And so it was, if you think about artificial intelligence, the one company that everybody thinks of typically is Nvidia, right? Yep. They're the GPU maker, the most powerful GPU out there that is able to handle these kinds of models and basically make them possible. And so they cost a lot of money. And so Amazon, Meta, Apple, Google, right? They've spent billions and billions of dollars buying these chips to be able to produce these models. Well, it came out that DeepSeek wasn't, number one, they couldn't get access to Nvidia because there's a ban on shipping Nvidia chips to China. So it came out that they were able to do this model with lesser chips, or I should say inferior chips and less chips, right? So it was a lot more cost effective, a lot more energy effective, energy efficient, sorry. And so it rocked the names like Broadcom, Nvidia, Oracle, even the Microsofts, the Apples, the Googles a little bit, because it turns out you don't need to be spending billions and billions of dollars. Like we just got the report from Amazon last week. They're going to spend $100 billion this year in capital expenditures. Now, not all 100 of that is going towards AI, but a significant portion of that is. I think Microsoft was 75 billion, right? So
those are big numbers. I mean, those are big numbers.
So the fact that these guys did it for 5 million kind of changed the game a little bit. So we'll see. There's a lot of speculation out there that it's not necessarily accurate, but I think only time will tell. But because of this, what we did in our actions was we reduced our holdings towards AMD, Advanced Micro Devices. We've been reducing our allocation to Nvidia because we've been expecting this type of competition. And what this is going to do is it's going to allow other companies to create models at a cheaper price, right? These big guys are going to keep spending the billions because they want to be at the forefront. They want to keep pushing AI forward.
Sure.
But there's going to be more competition out there, and you're not going to have to pay it probably as much to these big companies to get access to their models if you want to build some type of AI product, right? So I think generally speaking, it'll be good. But if you think about the impact on the market, when Nvidia was the biggest, now it's the third largest company. If their product if they don't have pricing power anymore and they can no longer grow their revenue, they can't grow their earnings as quickly, right? That's going to be a pretty big impact on the company. And the fact that they're 6 or 7% of the overall S&P 500, that's a pretty big headwind for the market, right? And then you put that out there for Broadcom, which I think is the 10th largest company or 9th largest company in the S&P 500. If you think of the headwinds for like an Amazon and Microsoft, if they're still spending this kind of money, investors probably don't want them to do that anymore. So stock prices can probably be halted.
Negatively impacted.
Right?
Yeah.
So there's a lot of concern with what's going on in the AI space. But that's where we're trying to position away from, the chip producers and more towards the software as a service type of company. Like a Salesforce is a good one. There's just different ways that we can transition and try and find the opportunities out there rather than just being sitting ducks for this kind of thing. But
and it goes back to diversification, right? Diversify.
Yep, exactly. So we'll see. But it's certainly interesting. The more that I've read into DeepSeek, how they do their model versus the big guys and how they're doing their models. It certainly is evolutionary, right? It's different. So we'll see what continues to happen with it.
Yeah, good.
But yeah.
Interesting. Yeah, the whole AI thing, everybody's interested in it, and it obviously can affect things. Some company over in China comes out with a product, or somebody sneezes in China, and our markets are affected at this point. So that's what I always say. So you have to watch out for that. But that's why we have guys like Tyler Ellegard manning the helm over there at Gradient Investments, watching over these things, him and the GI team there. Great show today, Jason. Thank you, Tyler, for coming on. Jason, good one, right?
Yeah, another great show. Thanks again, Tony, for everything you do, but especially thanks again, Tyler, to you and your team over there at Gradient Investments and being an awesome resource, not only to manage money for our families, but to be on the show and share your intelligence and your insight, and then to be available to come over for our events and even have emails or phone calls with our clients. It is invaluable. So thank you so much for that. Hey, any of our listeners out there, if you haven't checked us out on YouTube, please go out there and do that. Go to YouTube, type in your Financial Empower Hour. Like us, follow us. Love to have you on all the channels. Thanks again for being listeners, and thanks for being YouTube followers.
All right, that does it for today's episode of Your Financial Empower Hour with our host, Jason Cryderman.